Now you can see, are you bullish or bearish on Ethereum? Are you bullish or bearish?
We are bullish.
We're bullish, exactly, because we can see that price is consistently creating
Definitely new highs.
new highs, consistently creating new highs. And coming down here, all we're looking for is opportunity for price to still continue to create a new all-time high. So what we now do is we keep looking for key levels to buy Ethereum. And you can see, for example, look right here. We have this fair value gap right here.
Yeah.
Now look how price came down, rallied, still came down, rallied, went down really below that fair value gap, making everyone feel that this key level will not work. But look what happened eventually. We still rallied again.
Still rallied
And
up.
then and then look right here, we still have a fair value gap here. And we came down into that fair value gap. What time frame break of structure would you like to see from here for you to be looking for a buy?
So 4 hours now.
Exactly a 4 hour. So you go to a 4 hour time frame and you look for a break of structure. And right here you can see on 4 hour time frame, we were trending to the downside, creating lower highs and lower lows. So all you're looking for is to see price tap your point of interest
Mhm.
and then change structure from bearish to bullish. That's all you're looking for.
So that's going to be the highs now.
Yes, so this right here is our new high.
Yeah.
And you can see how we broke that structure.
Structure. Yeah.
After we broke the structure, all you now do is you look for a fair value gap that price will come down into, either this one or this one. And if it's confusing, this is what I do if it looks confusing. Just scale up to a bigger time frame. You can scale up to a bigger time frame where you can easily see those fair value gaps. So for example, in this one, if you look, you can see if you go into your 8 hour time frame, it's a lot easier to see the fair value gaps. You can still see it if you go into your 4 hour time frame.
Yeah, but
The
it's
only
still,
thing is on 4 hour time frame, there's too many fair value gaps.
yeah, too many
Too
weeks.
many.
Mm.
Too many. So now this is another thing to put into perspective. When there's so many fair value gaps and you don't know which one to work with, scale up time frame. You can go to 8 hour, 16 hour, daily, weekly, scale up time frame to so you can minimize the fair value gaps. The more you minimize it, the more understanding you will have.
The clearer the market will be.
Yes, the clearer it will be for you because if there's too many fair value gaps to work with, that means there's too many points of interest. So the same thing here, you can see there's just two fair value gaps. You can now decide, okay, if this one doesn't work, let's say for example, price came in here and you bought it and it rallied and then went straight to your stop loss and you took a loss. What you now do is you stay on the sidelines until it comes down to the lower one. Once it comes down here, what time frame would you like to see for you to look for a trade?
Okay, so because we're on the 8 hours time frame, okay, I'll be looking at the 15 minutes time frame actually.
Remember, you're looking for three time frames lower time frame from the time frame you're on. This is 8 hour. What
Yeah.
three time frames are lower than 8 hour? If you're looking at all this time frame, look at this is monthly, weekly, daily, 4 hour, 1 hour, 30 minutes, 15 minutes.
Yeah, but the monthly and weekly are not lower, so I'm not considering them. That's
So
so
which
maybe
ones are you counting from?
I'm counting from the 4 hours now,
So count from 4 hours. So which one is the third time frame?
the 30 minutes
Exactly, 30 minutes. So all you want to see is a 30 minutes break of
of
structure
structure.
from that key level. And now right here, this is the key level. So I'll remove this other higher lines and focus only on this one. And you can see right here, we created a high, created this low, created a high, created this low, created this high, created this low. And then right here, we broke structure. So the moment we broke this structure here, you look for entries. You can use this fair value gap here as your entry. You can use, there's so many fair value gaps. There's this one here. There's this one here. It's up to you which one you want to use. And you can see that every single one of them got mitigated. So anyone you used, you would have been activated. Or you can even have multiple entries. If you don't know which one to use, you can literally use all of them and have, let's say you want to risk 1% on this trade. You can split the 1% into two, put in zero point 0.5 here, zero point 0.5 here, and move on with your life. And you wake up from sleep. This trade activated last night around 2 a.m. So the reason I know that is because I entered the trade. So right here, first entry, and you can literally have a second entry. And literally here is 1:6. First entry would have delivered 1:3.9. Second entry would have delivered 1:6.3. So both trades would have delivered a 10%. So if you were risking, let's say 0.5, 0.5, this one would have made you almost 2%, and this one would have made you around 3 point something percent. So you'll be up like 5%, risking 0.5, 0.5 on both trades, which is not bad.